Well, with many Canadians buying their first homes later and working longer, the expectation that a mortgage would be paid off by the time you reach retirement is a pipe dream. What kind of challenges does that pose, and what are your options? Joining us now to break it down for us is Peter Sashecki from Everything Financial. Good morning, Peter. Good to see you.
Nice to see you. Good morning.
So before we get to today's topic, we do want to get your reaction to the Bank of Canada's announcement that its interest rate decision has come down, dropping a 1/4 percentage point. What does this mean for homeowners?
Well, it means exactly what we're tying into with this topic today, which is strange, but that lower payments on variable mortgages, the home equity line of credits or the variable mortgage that might be prime minus 1% or something like that. Well, that payment has just gone down by a 1/4 point. So that could be, $100 or it could be, $300, $400, depending how big that mortgage is. So it just means a little relief, or leave your payments the same and you're dipping in and paying down that debt a little quicker, which is great. So any of those things are good for the homeowner, the consumer in general.
Yeah, a little bit of relief there. Okay, now on to today's topic, which, as you mentioned, is connected to interest rates. The new reality of retiring with a mortgage that's not paid off. We are seeing more Canadians expecting to carry their loan into retirement. Why is that?
It's a lot of things, Carrie. It's the price of houses, for one, especially in our province, obviously, that have gone up. It's also going through over 20 years of really, really low interest rates just actually made people not make it a priority because it gave them more money for other spending. And one of the biggest things, Carrie, is taking money out of these high valued homes where you have a lot of equity and taking money out and helping your kids get the head start on home ownership. So you're carrying debt into retirement. And it definitely is the new reality. It's different from our parents and our grandparents' generation. Also, they were buying a house for $100,000 and value of money was different, but you were carrying mortgages for a few $100,000 you could pay it off in your lifetime. Now a mortgage that's 7 figures is normal.
Yeah, things sure have changed. And you're right, we do have the bank of mom and dad now. With the average age of retirees gradually increasing in this country, how much of a risk does that pose for a retiree?
Well, not really much of a risk if you plan properly, Carrie. So when you're working on a retirement plan, you look at, okay, and we've talked about this many times in this segment, how much money am I going to need? What's my monthly expenditure? We'll include the mortgage in that monthly expenditure. So I'm going to need X amount of dollars every month. And you may want to look at the mortgage as it's a pretty good rent payment, because we've talked many times about how hard it is to rent and how expensive rent is. There's many people whose mortgage payment, and it's not like a massive mortgage, but there's still a mortgage there, is cheaper than a rent payment. So why not have your own home as your rent payment? And you can live in it and you stay in it longer. You're in it because you want to be in it. You don't have to sell.
Yeah, if you find yourself in this situation, what are some other steps or strategies to manage it?
Well, this is where, ironically, today's interest rate cut comes in. I said, why sit there and make yourself, house poor, where you're just paying every dollar to try and pay down that house? This is where a home equity line of credit or a variable mortgage, where your payments are lower and they're mostly interest. Again, it's like a rent payment, would be better off. Why in your late 50s, 60s, sit there and spend every dime to pay off even a $500,000, sounds so silly, even a $500,000 mortgage that you're never going to dip into? Why worry about that, especially if it's a $500,000 mortgage on a house that's worth $2.5 million? You're still going to be leaving a lot of money to the next generation and a legacy to your children or possibly your grandchildren. So again, look at just servicing the debt like a rent payment, and keep the rest of money for yourself, so you can enjoy retirement, travel, etc. The other things that life brings when you retire.
The things that you want to do when you retire, and you deserve it. Peter Sashecki with Everything Financial. Thanks. Exactly. Good to see you.
Thank you, and go Jays.
Go Jays.